Hello, everyone. Thanks for joining us on this Wednesday, and welcome to this educational presentation. Now, today we're going to be talking about what everyone wants to do, and we're all taught that this is the best way to trade, buying the lows and selling the highs. The only trouble is it's very difficult to do, but there is a particular style of method, a strategy that is designed to do this. Let me share with you what I'm talking about here. These are called pullbacks. If you're not familiar with what a pullback is, the standard definition states that in an overall uptrend, a pullback is either a large, moderate, or shallow sell-off. As we see here in this older chart of AMAT, obviously we're slowly going higher. So this is an overall uptrend, higher highs, higher lows. So what a pullback method wants to do is buy at the lower range within an overall uptrend. More specifically, at these lower levels. Now, a pullback is also in an overall downtrend. A pullback is either a large, moderate, or a shallow rally, sort of a bounce. So as we look at, once again, this older chart of OKTA, once again, we're in an overall downtrend, making lower lows and lower highs. So what we want to do within this method, the characteristics of it, are simply sell on these bounces or these rallies. So the question comes up, is there a strategy specifically designed to identify these high probability pullback setups? Well, the good news is that's what we're going to be talking about today. And even better than that is that this strategy, this method, is on our platform, the PTS Primo Charting Platform. It's the educational platform that actually teaches you and identifies these pullback strategy setups. So welcome to today's educational presentation. You haven't joined us before. My name is Steven Primo. I'm the president and founder of Specialist Trading. I've been trading now for 45 years. I started my career on the floor of the Pacific Stock Exchange, where I was a specialist for 9 years. I was actually on the floor 16 years, and 9 of those years I was a specialist. The specialist is someone that made markets, roughly about 50 or 60 stocks. So you wanted to buy or sell a particular equity, the floor broker would take your order over the phone and then walk over to the specialist who specialized in making a market in that particular equity and then buy or sell the shares from them. So I did that during the crash of '87 and the bull market that followed. And so I've traded and seen just about every market environment you can imagine, straight up, straight down, sideways markets. And on top of that, in my 45 years of trading, I've traded just about every system, every technique, any method you can think of as well. As I often state, even if you think that something is brand new high-tech method or system, it's most likely been around before, just been renamed or rebranded. So what we do as Specialist Trading is just share with our students around the world. I'm happy to say in over 105 countries, over in 15 countries, I'm sorry, and in every state in the United States, all the tips and techniques that I've accumulated that really work, things that have shown high levels of consistency, and then we teach them to our students so that you can ultimately make your own decision. This is our philosophy of trading and of teaching so that you can become a consistent trader. And you'll see that today in today's educational class. Now, we have to share with you our disclaimer. We're required by law to share this with you, so please take a moment to view it. I'm going to show you a lot of performance results using this particular method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are an educational company, first and foremost, all examples are strictly for educational purposes only. Now, if you're new to my website or to our educational presentations, I'd like to announce that we do have a Twitter page. You can get a lot more free education on a daily basis. There's our handle right there. I would suggest copying that down and joining us because I post different information on a daily basis, signals that our strategies and methods have generated, and also bits of financial wisdom. So there's a lot of great free information on a daily basis on our Twitter page. Now remember, we are different from other websites and other presentations you may have seen on the internet, other webinars, and the fact that we're not going to tell you what we think the market's going to do. I know a lot of you come to these webinars, or I get these emails from new students saying, well, Steve, what do you think of this market? Or what do you think of this stock? Or, well, what do you think I should do here? Is this the best time frame, or what's the time frame you trade? You see, we've all been trained and taught to learn from someone else, which is good. You always want to learn from someone else, but we've always been taught that they're supposed to tell you what to do, okay? And that is a recipe for disaster. I know when I first started 45 years ago, that's the way I was taught. And I just blindly followed along these so-called gurus, and I lost a lot of money. In fact, my first 2 years on the floor of the exchange, I didn't think I was going to be there much longer because I was blindly following all of the people on TV, all of the newsletters, all of the information I was supposed to be receiving, supposed to tell me what to do, right? And it didn't have any level of consistency. So my mentors taught me that what you need to do is focus on methods, techniques that have high probability, and just focus on them rather than trying to trade by listening or copying someone else. So that's what we do here at Specialist Trading. We are first and foremost an educational company with our goal not to trade for you, but to teach you how to trade with the specialist edge, okay? And you'll see that in today's educational presentation. A few announcements before we begin. Remember, this is a static Zoom presentation. It is not interactive, so please remember to disable all cameras and microphones. Also, this is being recorded, so if you have to leave early or if you're having technical issues, you can, don't worry, you can see that we will send each and every one of you a link to this recording if you have to leave early, okay? And then lastly, if you have any questions, I like to take my questions at the end so that we don't stop and pause for every slide. So if you have a question, just remember to write it down. I promise I will get to all of them at the very end of today's class, okay? All right, so why don't we begin? Let's talk about pullbacks. Now, I know a lot of you are familiar. You've seen my webinars on pullback before, but if you're not familiar, let's talk about what a pullback entry actually is. Let's just look at these kind of generic charts here. Firstly, you want to see the first phase, which is the beginning of a trend. So you want to see some trend established. Once a trend is established, this is what always happens. You get what's called a counter trend. Now, most people say to themselves, well, this counter trend means that we've topped out. And this is where people usually fail because they fail to see it as a pullback. And what they think is that the trend has changed. They say, well, we've topped out. I went to that chat room and the guy said to sell everything. It's overbought, so we should sell and get out and maybe even go short. But in all actuality, if you have the right technique in place, the right method, this is just a pullback. This is phase 2. And what you want to do is at some specified level, some specified price you want to buy. Because if it is a true pullback, it'll continue its upward trend in phase 3, okay? So this is the basis for pullback trading. This is where you want to be entering on phase 2 in the pullback. And if you want to be shorting, it's the same process. You just turn this upside down. So this brings us back to the question we talked about. Is there a strategy specifically designed to identify these high probability pullback entries? Well, good news, there is. This is strategy number 9. This is what we're going to be talking about today. It is one of our really proprietary, unique strategies that is just based for trading pullbacks. Some of the highlights: it's a buy low, sell high pullback strategy, proprietary indicator-based method. So this means that all the requirements are basically fine-tuned to indicators all coming together to generate these signals. Now, the good news is strategy 9 can be applied to any market, any time frame, and any trading. Now, remember, the basis for a pullback is phase 1 and then phase 2, where it's a counter trend. So let's say you're buying. This means the pullback will mean when there is a sell-off. This makes it really fine-tuned to apply to option trading, because with option trading, you will be able to enter at when the premiums are very low because we've sold off. So this makes it really keen for option traders, okay? With all our methods, though, you have decided to become a student of mine in the strategy number 9 course, please, we always advise everyone to paper trade first. We do not want, even with the information I'll be giving you today, do not want you just jumping in and buying with, jumping in the water with both feet first, because that's usually where students lose money because they haven't studied the rules. Our edge with all of our methods, all of our techniques is consistency. And consistency really means that there is an awareness of losses, meaning that we know that some of the trades won't work out, but a consistent method is one that's able to recoup those losses. So it's okay if you have a method that loses every once in a while. In fact, today, when I was trading this morning, I'm trading pullbacks this morning on E-mini futures. My first 4 trades were losses. They were small, but they were all losses. By the end of the first couple of hours, I had made it all back and I had a profit. This is what we mean by consistency. So you have the confidence in knowing that even if you have a loss or even a series of losses, you'll be able to recoup them. So all of our edges, all of our strategies, and most particularly strategy number 9, are extremely consistent. Now, I can't give away the rules because it's a very simple method, but let me just share with you some more highlights about this. This employs 2 simple indicators, and their relationship to the price automatically produces signals. Usually when people have indicators, it's their relationship to one another. Did the moving averages cross? Was there a topping in the oscillator? That's the way people look at things. No, we're looking at these indicators and their relationship to the actual price, all right? Now, in an overall uptrend, as we said, the buy signals will be generated during a decline. And in an overall downtrend, sell signals will be generated during a rally. This is where we go back to the premise of buying low and selling high. Now, we're not just buying low because, hey, that indicator says we're oversold, or we're not just selling because it's too high, it's way too overbought. No, there's a method to this. We're buying at lower levels within an already established overall uptrend. So the overall uptrend is still up. We're just having a counter trend within that overall uptrend. And we are selling at higher levels, but within an already established overall downtrend. All right, so let's look at the trading process and show you how simple it is to apply on our platform. Okay, once again, let's look at that chart we were looking at in the beginning, AMAT. All right, the overall trend is up. How can we take advantage of buying at these lower levels, right? Well, on our platform, what you would do is click on strategy number 9, click on in the drop-down menu, click on signal arrows, and you'll see, look at the host of these signals that were all generated here, okay? Now, we call these, when you have 2 or 3 next to each other, we call these cluster signals. These are high probability when you have 2 or 3 next to each other, okay? Same thing goes with the downward market, all right? Obviously, the market is heading lower. We want to be selling at these higher levels. How can we do that? Click on strategy 9, click on signal arrows, and look the process how it would have got us short right at these high levels. This is why we say it's really opportune for option trading. Now, I don't want you to think that this is a system where you just blindly click on strategy number 9 and click on signal arrows and you really basically take yourself out of the game. We teach you all the rules. Everything is learned in the process. The only reason we provide these arrows is for you to check your work. As your mentor, I want you to be able to identify these setups on your own. But since I'm not able to sit next to you 24/7 to see if you're properly identifying the sell or buy signals, click on our platform and you'll see if you were right. So ultimately, I want you to get to that point where you don't even have to use these arrows anymore. They're just for educational purposes only. Remember, we don't teach black boxes. All right, so let's look at some current strategy number 9 examples. And once again, everything you're seeing is displayed coming from our platform, the ease of use where everything is one click away. Let's start out with buys first, okay? As we look at this chart in DXCM, all right, it's been going straight up, right? Now, this is the beginning of a trend. This is phase 1, which we talked about in the beginning of the pullback method. What usually happens after that is you get some type of arresting, minor, shallow, or moderate to large sell-off. This is a rather moderate sell-off. But most people would say, hey, look at all the down closes here. Down, 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 only one up and then back down again. This is pretty negative. I think I'll exit my position. But in all actuality, this is a pullback. So once you learn the rules and know how to identify a pullback, click on strategy number 9 to check your work. Once again, click on signal arrows, and you see right there near the lows of that sell-off, strategy number 9 generated a buy signal. And phase 3, the resumption of trend, you had a nice little profit in 7 days of roughly 25 points. This is how simple trading can be when you're not relying on outside sources like TV gurus, so-called trading gurus, or chat rooms, or interest rates, or economic indicators. You're just listening to the market and what it's telling you in front of you on the chart. Another example here in GILD, G-I-L-D, okay? It's been going up, looking very nice, but look at this. Wow, it looks like we topped out right here, had a little gap opening and straight down. So for all intents and purposes, we're in a downtrend, right? Well, not really. If you study the process of strategy number 9, you see this is actually a pullback. And right here, a buy signal was generated. Took a little time, but ultimately got up 17 points. So where everyone else was thinking we had topped out, time to exit this, you were actually buying. Here's another example, REGN. Now, this is an expensive stock, obviously $700 stock, but the process still applies the exact same way. You're in an uptrend, higher highs, higher lows. So you see that, okay, it's going higher, but now a downtrend starts. Look at, we made a high and straight down. Look at all the downward closing days. That guy on TV says, you got to get out of this. It's probably going to go down a couple hundred points. Probably best to sell and just stay away from it. Well, this is why most traders lose money, because you blindly follow someone who really doesn't have any higher level of consistency than anyone else. If you're following the market, it's telling you that this is a pullback. This is not time to get out. This is actually a buying opportunity. And with strategy number 9, click on the link, and then on the drop-down menu, click on signal arrows, and you see right at the bottom, we have a little mini cluster of buy signals. Right where everyone's selling, you're buying. Right where everyone's getting out of the pool, you're actually going in. And 60 points coming into November. Now we can apply this to expensive stocks like REGN or inexpensive stocks like Loco, Pollo Loco. All right, obviously we're in phase 1 right here. We're in an uptrend, right? And then look what happens. Wow, okay, well, we had a major gap down there, probably off some news, probably off some events, something happened, I don't know, but that guy in the chat room doesn't like this. He says you should exit out of this. It's probably going to be a $2 or $3 stock, and take your money out while you can, okay? Once again, this is the way most traders make their decision off some guy or some person telling you what to do. Why not listen to the market? Because if you listen to the market, it's telling you that this was just a pullback, and you had a cluster of buy signals. And then coming into this last week, the stock rose 12%. Okay, now remember, this is an inexpensive $9, $10 stock, but it rose 12% in just 2 weeks. What if you had Google? What if you had Tesla and it rose 12% in just 2 weeks? Here's an example in the euro yen for all you not candlestick traders, but all of you currency pair traders. Okay, this follows the same process where we're going higher, and then all of a sudden it looks like we've topped out. Time to get out, right? No, went right back up. How could we have taken advantage of that? Well, look at strategy number 9, generated a buy signal right at the very low. Now, as the market kind of goes sideways, we have a sell-off right here. All right, strategy number 9 generated another one. So if you missed the first buy signal in the currency pair, you could have taken advantage of this one. And we can also go into long-term trading with this. This isn't just something for day trading or looking at daily bars. We can also look at a monthly bar in Costco. Now, obviously, in hindsight, Costco's been going straight up since 2016. Could strategy 9 have helped us? Well, there's a number of sell-offs here, but look at the buy signal was generated right here in 2016. And then 2 more right here, a little cluster right there. And then still 1 more in 2019. You could have taken advantage of this and potentially captured over 460 points. Okay, let's look at the selling opportunities now. All right, let's switch things around, turn it upside down, and show you the process for going short. Here's an example in workday. All right, obviously going lower, but as we see here, this is phase 1, the beginning of a trend, in this case, a downtrend. And where most people would say, hey, Steve, the downtrend's over. It's time to get long. Look, we made new highs, closing highs. This thing is going to the moon. This is actually phase 2. It's just a pullback. Now, just looking at this face value, you'd say, well, how do you know that? We teach you in the course with the help of these 2 indicators what to look for. And you'll know whether it is the beginning of a new trend or if it's simply a pullback. Now, we apply strategy number 9 since we are in the pullback phase to see if there's any signals. Yes, there is one right here at the top so far. You could have sold roughly around 156 and made 27 points on phase 3, the resumption of the downward trend. This is why most traders lose, because they're out of sync with the trend. They see price start to head lower, so they say, okay, we're in a downtrend, I'm going to get out. And then once it's going back up, they say, wow, this thing has really firmed up. That guy in that chat room loves this, so I'm going to buy. And they usually buy around here. And then that's the time when you should be selling, because look what happens. So really being out of sync with the market, with the trend, is at the root of all your losses. Here's an example in Amazon, okay? This was just about a month ago. Obviously, it's going lower, and look, it's making new highs again, right? So are we in an uptrend? Nope, we're in a downtrend, and this is just a pullback. The overall trend is still down. So where most people were buying, thinking it's going straight up, you could have been selling 30 points coming into last week. Let's look at Meta, okay? Obviously, the stock has been going lower, okay? Just heading lower, and then we get a nice little bounce. This was just about a month ago. This is where a lot of traders say, hey, Steve, there's a bullish engulfing pattern right here. That's the sign of a bottom. I took that $10,000 candlestick course, and that's always saying that's where the trend changes. So you got to buy it, right? Well, nope, because it's a pullback. This is a pullback bounce in an overall downtrend. So if it's a downtrend, and if it's just a bounce, you want to look at that as a selling opportunity, not as a point of reference to get in, the way so many false trading gurus tell you. So we're looking to sell this. Click on strategy number 9, click on signal arrows, and right here we have a sell signal in Meta. And isn't it funny, this was on the 19th of October, how this stock has fallen out of bed. Now, obviously, there's been some bad news. The stock gapped down. I have no idea because I don't follow the news. I stopped looking at news 4 decades ago. And if I'm still here, I'm living proof that there's absolutely no need to follow news. If you want to, feel free to go ahead, but it's not taught in any of our courses. It just really complicates things and muddies up the water too much. And it's funny how I got a signal to go short Meta a full week before it gapped down. And you see this happening over and over again. It's not guaranteed. I'm not going to tell you it happens 100% of the time, but it's been my experience that signals are generated when you're basing them off market behavior well in advance of the news, just as you see right here. And potentially you could have made 45 points on that. You think it would have been nice to have some put options on this? Now, looking in hindsight, here's a weekly chart of PENN, okay, P-E-N-N. Obviously, in hindsight, it's in an overall downtrend. How could we have taken advantage of this? Well, look right here. Before the overall downtrend was in place, most people would think, hey, we bottomed out. Look at this nice little spike here. We had 2 sell signals at the very top, a little mini cluster, and that's where you could have gotten short at the very top. This is on a weekly chart, so last year roughly, and potentially made 55 points. If you missed that, there was another, see this short little bounce right here? You could have taken advantage of this and probably potentially made like 30 points if you held on. Okay, let's review what we taught you today. A pullback is either a large, moderate, or shallow sell-off, but in an overall uptrend. So the overall trend is going higher, and you look to buy at these little small or moderate sell-offs, okay? Now, it can also be a large, moderate, or shallow rally, but in an overall downtrend. So if the overall trend is going lower, you're looking for these little bounces to go short. Now, it's not as simple as that, because you have to know exactly where to get in. That's the beauty of strategy number 9. Remember, this is one of our premier pullback strategies. It's a proprietary indicator-based method. The beauty of it is you can apply it to any market, any time frame, any direction. If you're an option trader, this is an ideal method to trade options with, because you'll be buying many times when the premiums are much lower, okay? We advise all our students to first paper trade. Learn the method first, the same way with the information I gave you. Don't just think that, well, Steve says a pullback means that a little bounce so I can sell. No, you have to practice and learn all the rules first. Our edge is consistency. There are times you will get false signals or signals that are not winners. That's okay. A consistent method is able to recoup those losses many times sooner than later. So ask yourself, do you think pullback strategy 9 can help your trading in 2023? You've only got about a month and a half left to go. If you're nowhere near where you thought you'd be at the end of the year, this is a great way to get back on board. So we have a great attendee offer for all of you taking time out of your Wednesday to come hear me teach today and give you some education. This is our next level pullback trading special, strategy number 9. Detailed video course instruction. You're going to learn all these different entries, all the different exits and stop placement. You're going to get the entire course rules, okay? Remember, you can apply this to any market, any time frame. But let me share with you some extra bonuses, okay? This is an extra bonus for becoming a student of mine in the strategy number 9 course. Everything you saw today was displayed on our platform. We showed you how simple it is You learn the rules, you'll go through the video course, and then it's as easy as using our platform to educate yourself, all right? Because of that, we're going to throw in a full year free of the platform. You're going to save over $1,700. This is a 35% discount, okay? This is a great way to get acquainted with us once you become a student of ours. Now, with the platform, it's, you know, you're not going to just get strategy number 9 and that's the only thing on there. You're going to get a host of different tips and techniques that I've accumulated in my 45 years of trading, right? Things like our enhanced buy sell line that tells you the overall trend, 4 different ways to find the overall trend, okay? A strength of trend tool to tell you when a trend is just about to begin or just about to end, okay? Over 90 of the most prominent technical indicators plus personalized tech support. But here's the best thing. These 2 things right here, which I'm extremely proud of and I use on a daily basis, they are our strategy signal scanner and our auto-generated exit levels, okay? Let me share with you what they are. Let's say you had scanned Amgen. This is an older chart of Amgen. You had scanned Amgen. You don't believe that we're plotting some things here on our Skype page. But let's say you had traded Amgen. There was a buy signal, and you could have seen that you scanned for. Now, here's the best thing. You double-click on the up arrow, and you'll see a series of exits. This is just one of our different exit methods. And what you would do is double-click on. You'll see 4 different exit methods appear. These are levels to take advantage of. If you're the type of trader that wants to get in and out quickly, you'd exit at level 1 or 2. If you want to hold on a little bit longer, 3 or 4. But we always advise students to get out at the 4th and final level right here, because that's usually where the trend changes. So roughly you would have bought right down here, roughly about 220. You could have exited right here about 240 roughly. That's 18 points you would have made in just 2 days. And then look what happened after that. See how the trend changed? Now, same thing happens with selling. Here was a sell signal at the very top using strategy number 9, an older chart here in PayX. Double click on the arrow and you see these 4 different exit levels. Once again, if you wanted to take the 4th and final exit level, if you really felt it was going to come all that way down, you could have placed a limit there. And right after you clicked it on, as we see here, just take a moment as my computer updates here, you could have gotten out with a quick 12-point gain before it went right back up. So this is also included in the series of different techniques and methods on our platform. As it says, a year from today, you will have wished you became a member of the strategy number 9 course. So here's how to take advantage of this. This is our next level pullback trading special, the entire course plus a full year of the platform absolutely free. Now, normally this would cost you over $4,700, okay? We realize that's a little bit too much for some of you, and I understand that, so we're gonna have a great discount today. We're not gonna charge you $4,735, we're gonna discount that down to $29.95, okay? You're gonna save $1,740, that's a 35% discount. But here's the best thing, we're also including payment plans. So that means you don't even have to come up with $29.95 for a small deposit. You can still be up and running and establish a payment plan with Pro Trader Strategies, my sister site, and you can be up and running as early as today. That's how great this offer is. So you don't have to come up with $47.35. You don't even have to come up with $29.95. You can come up with a small deposit and establish a payment plan, and you can still be up and running, okay? So here's how to take advantage of this. Contact Pro Trader Strategies. I would suggest giving them a call at 310-598-6677. And you see this link below is the link that will take you to the sign-up page. There's also more information there, and I'm going to post that right now. If you look on your chat box, you see that they just posted that as well as I did, and so you can click that on and take you to that page, okay? I promised you I would answer any question you may have, so if you have one, now's the time to ask. Go to your question and answer box, or you can either go to the chat box. It's up to you, and I promise I will answer them to the best of my ability. Someone says, can this work on intraday trading? Yes, it can. I'm sorry, I didn't have any examples of that, but I showed you different markets. I showed you, I believe it was a 4-hour chart in, the 4-hour chart was in the Euro Yen, yeah. But you can also, I use this on a 10-minute chart of E-mini futures. I also use it on, daily bar. So it makes no difference what time frame or what market, okay? That's the beauty of strategy number 9. And remember, once again, if you're an option trader, this is a great way to trade options, okay? So because you're buying or selling at higher prices or buying at lower prices, okay? Any more questions while I have it here? Strategy number 9, once again, is one of our premier pullback. Someone is asking, how do I contact you? Well, if you're contacting in terms of setting up a payment plan, as you can see here, I would highly recommend giving Pro Trader Strategies a call at 310-598-6677. But if you want to contact me, we only have that reserved for students of mine. But once you become a student of mine, you get my private email address. You can contact me whenever you'd like. Okay, so that's if you're having difficulty, if you don't fully understand the process, you can email me whenever you'd like. Okay, if there are no further questions, we are at the end of the presentation. Remember, even if you just have questions about other methods or the data sources for the platform, anything, you can call Pro Trader Strategies. They would be happy to give you a quote. They would be happy to give you more information, and there's no obligation at all. So they won't pressure you. They'll be happy to work with you, and they're very flexible in terms of pricing. All right. Okay, as we close and take one last look at our disclaimer, thank you so much for taking time out of your Wednesday. I hope you learned a little bit about pullback trading. It's my particular best, or I should say favorite way of trading, pullback trading. I'm more of a pullback trader now. But in closing, I look forward to all of you becoming students of mine in the strategy number 9 course. Thank you so much for taking time out of your day today, and I wish you all the best of luck. Bye-bye.